Welcome to Accounting Unpacked with Yucky and Dawn. We hope you're going to enjoy episode number 2, where we're going to discuss interest on loans, where the interest is capitalized, and also how to calculate the capital repayment for the following year.
Okay, it looks like we're going to do interest on loans and the repayment of loans. Dawn, where will I start as a student?
Okay, let's read the information first. So it says there, the repayments on the loan. Well, we need some color here. The repayments on the loan are fixed. So in other words, there's a fixed amount that we pay back on our loans every month. And usually in the adjustment, they're going to say something like, including capitalized interest. And that's an important statement because...
Okay, what is capitalized interest?
Oh, okay, yes. Capitalized interest means any interest that you're being charged gets added onto your outstanding loan, and you will pay that capitalized interest within the same year in which that interest gets charged to your loan, and that interest is paid through the fixed monthly installments that you pay back.
Okay, so that makes quite an interesting calculation to get to the interest itself.
It does. But just to recap now, that 35,000 Rand is actually paying two things. One, it's paying the interest that is being charged on the loan. And the second part that it's paying is the capital portion of the loan. And the capital portion of the loan means how much you originally borrowed. So this portion is paying back part of what you borrowed. And this part is paying back the interest that you're being charged for that year on that particular loan.
So we can just take the 35,000 and say, okay, times 12. So we know that will be the total amount that we've paid back for both those items.
Yes, 100%. So let's work that out. What is 35,000 times 12? Okay, let's just work that out quickly. 35,000 times 12 is equal to 420,000 Rand. So that is what we paid back over an entire year, and it includes the interest portion of the loan as well as paying part of the original loan back.
Okay, so how are we going to go about to find out what the interest is?
Okay, so very important, we do need the opening balance on our loan, and we do need the closing balance. Sorry, not an O here, we need a C. We do need the closing balance. So Yucky, do you know where would we find this information if it's not given to you in the adjustment?
You can find that in the trial balance, or sometimes even in the previous year's balance sheet or statement of financial position, they can provide that.
Yeah, because for example, this one here where it says 1 July 2020, they might have a column in the balance sheet which shows 30 June 2020 to indicate the closing balance of the previous year. And then you'll have another column dated 30 June 2021 with a different balance. You can see that they're not the same. So this is the difference in terms of what we owe on our loan compared to the beginning of the year and the end of the year.
So we can do a calculation by what I would do. I would start at the bottom and say, okay, at the end, it's now 4028.
Okay, let me put it in a little table.
Yes.
I'll show you what I do. So I take the opening balance, 4175,000. I know that interest, which is an unknown amount, is going to be added to this outstanding loan. I also know I'm going to be making payments during the year for 420,000 that we calculated here. And the net result is I will have a closing balance of 4,028,000 Rand at the end of the day.
Yes, that's what I would do as well. And then you work backwards.
Correct. We're going to solve for X. So you can do the following. You can enter in 4,028,000 on your calculator and then do the opposite of what you see here. That's a minus or subtracting 420,000. So you can add back the 420,000.
And that's important that we realize we have to change the signs when we work.
Yes, when you're going in reverse. And then you will minus your opening balance. So minus 4175,000. And that gives me a interest amount of, so let's just put this in a little bit more neatly because it's looking a little messy over here. So that means my interest is equal to 273,000 Rand for the year.
Good. Now, my question further is, what do we do with that 273? Where do we work with that?
So that 273,000 is going to be recorded in your income statement The line just below where it says net profit no, not below, sorry, just above where it says net profit before tax. You're going to enter this 273,000 Rand as your interest expense. And sometimes they have another word for it. They don't always use the word interest expense. They say financing
Costs.
Yes. Please also remember in your final column, once you have all your interest expenses added together, please put it in a bracket.
Yeah, because a bracket is very, very important because you are definitely going to subtract it from your profit.
Yes, it's an expense. Yes. Absolutely.
And what is that profit also called that we're now subtracting that from?
Oh, yes, it was called.
We can also have interest income, but just before that, it is your operational profit.
Yes, totally. Okay, great. So we figured this out. That's no problem. Then what else do we need to do? What normally gets attached onto this particular type of question? We've already provided for interest on the loan, but normally after that, they ask you something else or they make reference to the current portion of the loan or what part of the loan you're going to pay back in the next financial year.
Yeah. So, and that goes as that will be a current liability, no? The part that you're going to pay next year.
Yes. So this is the continuation of this question now. So a fixed monthly installment of 35,000 Rand, which we worked out to be 420,000 Rand for the year. That was because we said 35,000 Rand times 12. Covers the loan repayment and interest, has to be paid over the full period of the loan. Interest will decline over the life of the loan. What does that sentence mean to you?
Your interest will become less. Why will it become less?
Yes, why will it become less?
Because you're paying off on your loan.
Yes, so the capital portion that you still owe gets reduced every year.
Yeah.
Therefore, the interest will decrease every year. Now they say the interest on the loan budgeted for the next financial year is 234,000. So they're estimating what the interest will be in the next financial year. And the reason why they're telling us this is so we can calculate what will our capital repayments be next year.
So you're still going to use your 420,000 because that's a fixed payment. That 35,000 is a fixed payment. And then you will subtract what now to get?
I think we should subtract the interest so that we know what portion is capital. So 420,000 minus 234,000 is equal to 186,000 Rand, which is the capital portion of the loan that we will pay next year.
Okay, and where does that go now?
So that
in the financial statements.
It goes into your balance sheet section. Or actually, if you're talking about your individual notes, it would go under trade and other payables first. And it's normally referred to as a short-term
loan.
A short-term loan.
Can they also call it current portion of loan?
Yes. Sometimes they are taught to write current portion of the loan. So either one of those will do.
Yeah. And if you put it there, you must remember where you have your non-current loan now. You have to subtract that 186.
Yes, so you're talking about the non-current.
Yeah, am I jumping the gun? Yeah.
No.
Okay.
You're talking about the non-current liability section.
Liability.
Yes.
So your loan will be into there, but then you must remember you're going to take that 186 away because you're moving that to the short-term section.
Absolutely. So I'm just going to get the closing balance of our loan from our previous page, 4,028,000. So in your balance sheet, under your non-current liabilities, you will have the loan and the name of the bank. You'll have your closing balance of 4,028,000. Here you will minus the 186,000, which is going to be the capital portion you'll pay next year. And you have transferred it to trade and other payables under short-term loan or current portion of the loan. And trade and other payables gets transferred to current liabilities in your balance sheet.
Okay. That sounds great.
We hope you found that very useful. Please like and subscribe. That would help us a great deal. And if you have any particular questions that you want answered, please post it in the comment section. We would love to help you.